so strange when you're a
Resume recording. Okay, so we're recording this. I will put it on a YouTube page and share it with everybody if you'd like. If not, I understand that as well. But let me make sure everybody sees this. Do you guys have the market data in front of you? Get the chat box up because then I lose. All right, yes. So we got the market data in front of you. I wanted to start that for everybody just so they could kind of see where we've been going, because we've been headed in a great direction, namely just these pendings. These are those numbers, those leading indicators we talked about weeks before that we want to look at. But before we dive too deep into all that, I'm going to stop sharing and just go back to just me. I want to talk a little bit about who we have as a guest today, people that we're going to be talking to, and then some of the topics, a quick overview. Shirlayne, Quayle with St. George City, is on to talk to us a little bit about the local economy. I have Wes Davis that's going to touch base with us on what's happening in the commercial world. I have Taylor Schoen is also on the call to talk a little bit about mortgage and the health of the mortgage. Taylor, thanks for being on, man. And then I'm going to cover briefly, I had a request from a couple of agents, actually several agents, discussing just residential real estate and what we should be talking to our clients about. Not necessarily a script, but at least having what kind of a discussion should we be talking about with our clients in whether they should buy or sell, or, you know, their feelings on the health of the greater economy and so forth. So Shirlayne, you're there. Can you, how's your mic working? And if you got a video, that'd be even better.
Yep. Good morning, everyone. How are you?
Good morning.
Well, I'm happy to be here. Thanks so much. I see lots of names I recognize, and lots of names I don't. So I've got a lot of people still to meet.
Yeah, well, they'll trickle in too. We got 19. They kind of trickle in, and we'll roll up to 50 here a couple minutes late, but it always gets rolling here.
Yeah, we're on Utah Standard Time, as they say.
Yeah, exactly.
Especially on a Friday morning.
Right.
Well, thanks for having me. I was asked to just speak a little bit about the local economy and the move to yellow, and then just give you all an update on kind of our construction permits and everything. And so I'll let me touch on construction permits first, because it's been interesting. We have our April numbers out, and they're actually up from March and February. And so for like single family, we had 58 in February, 86 in March, and 101 in April. This is just St. George City. A lot of those are probably because we have these big developments going on, and you know that is not, we're not seeing a slowdown in it yet. So yeah. Inspections slowed for a little bit, and now they're picking back up as well.
How does that compare to last year and years previously?
So we are actually above where we were last year to date. And we're down for single family from April 2020, April 2020 year to date was 339 single family. I'm just going to look at single family because that's an easy metric. Yeah. And in April 2019 year to date was 327. So we're just slightly up, but pretty much on par. And we were at 309 in 2018 and 347 in 2017. So the only one that was higher for single family in particular was 2017. So, and overall, all of our permits, we're at 733 for this year, total permits year to date. And last year we were at 739. So we're tracking with last year overall. So it's an interesting, we were only at 553 in 2018, the end of April 2018. So the last 2 years have definitely been up in that regard overall for all permits. So we haven't seen that, a decrease yet. We'll wait and see what happens over the next couple of months as sort of March and April catch up in that regard and see what happens. But so far, it's been tracking pretty well. So we're glad about that.
Are you guys anticipating over there? Because you said yet. Are you anticipating that those are going to slide at a certain level?
You know what? We don't know. We would have. We just don't know what to expect. Right now, it's staying strong, and we hope that's what continues to happen. But there's always, we're cautiously optimistic, I think, is what kind of how everyone is looking at it. so we're planning for that. We just released our budget for the city this last week in city council meeting, and we slashed this year's budget from what we have this year to next year. We slashed 50 million out of our budget, and that was all because we're anticipating a huge drop in revenue. And
where would you say is the big bulk of that 50 million that you guys pulled out of the budget? Where did you guys save that from? Is that like capital upgrades or?
Yeah, a lot of capital projects, and really just across the board. I mean, we took out, capital projects is the biggest one, obviously, because that's the biggest chunk. But we took out, any non-essential travel, just all of those things that everybody's sort of cutting. We cut everywhere we could. And if it doesn't, dip as deep as we expect, that'll be good, because we're prepared to not have to, we can add things back in as we go. We were going to be remodeling City Hall, and that has been, definitely put on hold. Yep. So those kinds of things are there, but we're still doing, we still have some priority projects that are still going to be happening. Some of them will be finished this fiscal year. Some of them will move into next fiscal year. And so the council work meetings, each department head is presenting to council on the individual budgets, and the budget is posted on the city's website. So if anyone wants to go in and dive into that 311-page document, you can kind of see, and you can even look at it, versus last year's if you're.
I'm gonna get right on that for sure. That's definitely
great.
Something it sounds like a really good, fun thing to do.
It's a fun thing to do.
I sent you, or at least I was telling you about a interview that we had with Robert Spenlove, who's the senior vice president at Zion Bank. Are you familiar with Robert?
Yep.
So the interview was really interesting. I've watched it a couple of times, and he goes into a lot of data, and he kind of dives deeply into national data. And I was a little disappointed because he didn't really go into Utah data. And McCrae Hepler and I had a really great conversation, because I have told people this before, I keep going on these this teeter-totter of cautiously optimistic and like, oh my gosh, it's going to be devastating. I go on this teeter-totter of these things. And he really kind of was talking me through understanding the dynamics of Utah's economy is so unique to so many different states, right? If we were to try to compare this to any other time, Utah over the last 10 years has taken, huge strides in becoming more diverse in the economy and having kind of a more technology-based economy and things like that. In St. George, I know that's kind of been where we've started to head. If I wrote on my board over here is what is the goal of St. George? And even, I know you can speak for St. George, but are we looking, is the feeling that we want to continue to grow, and knowing that there's going to be a just in some economies in surrounding states, are we looking to take advantage of that and say, hey, let's attract some great businesses in this opportunity where we're kind of poised for that, where these other states might not be ready to grow in a sense while this thing kind of changes?
Yeah, that's a great question. And the answer is yes. We definitely want smart growth, and we need to be very conscientious in that. One of the things that we have been working on for the last couple of years, and specifically while I've been in this role, the last almost year and a half, we are really looking at targeted businesses. So when we look at recruitment in particular and corporate recruitment, really targeting the industries that are going to help us diversify and complement what we already have going on here. And so a good example of that is RS Technologies. They are a composite telephone pole company. It's based in Canada, and they were looking for a Western coast, Western US manufacturing and distribution hub. And so they had very, very specific needs, and they ended up coming here partially because we had a building in the Viracon building that was going to work for them, but also because of all of the things that work for our logistics and distribution, side of things, and the proximity to California and all of that. So that's still very strong in terms of our location that way. But what we're also seeing is when these kinds of shifts happen in the economy, a lot of companies want to start looking at coming to a smaller town where they can, they don't have to deal with the kind of the big city challenges, not even just regulatory things in terms of California companies that we work with a lot, but just that, let's move to kind of a slower pace. Let's kind of reset. And so we are seeing that our St. George Area Economic Development has seen an uptick in the number of requests and RFIs that are coming our way. And when it comes back to being targeted, we are really looking at what industries do we want to focus on and which ones we want to bring here. So we have a strong, our tech sector is definitely growing. We have biotech here, we have aerospace here, we have advanced materials here. So we have a lot of high tech industries anyway, and looking at the types of sectors that are going to complement those, and how do we build on the ones that are already here, but then how do we also add in things that complement supply chain, and so we can get economies of scale as we grow. So we're definitely looking at those pieces as a strategic move. We are in a great position as a community, as Washington County in particular, because people want to come here. We don't have to go out and recruit necessarily. So for us, it's much more, it's much more a strategy to say, what do we want? Who do we want? What kind of companies? Like, how do we present ourselves so that they can select out? Because that really is kind of an interview process when you're looking at these companies. It can't just be, and we are not in a position and haven't been for quite some time where we have to say, oh my gosh, please come here. We need you here. And so we really get to, kind of pick and choose in a way, and that makes for some really great long-term partnerships, and it sets us up for those companies that do come here to really succeed. We don't give them a lot of incentives and stuff and then have them come here and then not meet what they wanted to meet. We can really work with the companies that are going to come here and be a valuable part of the community and the economy. I think you're on mute. Are you on mute?
I am on mute. Thank you. You got me. That's like it's funny. It's a funny game to play, watch people try to talk while they're muted. I'm great. That's glad to hear that, because I've felt the same way. And when I moved here 5 years ago, so I'm not at all a native. I'm a transplant from California, like a ton of people that are here. I don't want to see things happen like they had in California. I was born in Sandy, up in Salt Lake, and moved to California temporarily, and then come back here to St. George. And it's interesting because I hear so many native St. George people don't want any growth. And then all these other people are like, well, we need to grow because everybody knows about us. We hit national news and media, and people just automatically attract to us. So I like hearing that we're not growing for the sake of growing, that we're kind of being more strategic about it. Right now, what is the mix in our economic, what's our economic mix? Is it still mainly construction and tourism? Are those the two main really economic drivers for St. George?
So in the kind of, those two are still really strong, but our sort of social and business services and healthcare, those are all really growing a lot. Healthcare is growing considerably, and construction, it hasn't taken a dip, as we said. It's still really strong. We'll see if it slows down, and that's one of the reasons why watching the permits is an interesting indicator. And so, and tourism is going to be the one thing that's really obviously impacted our economy with COVID. Yes, we still have a strong tourism base, and when we are growing and people are coming here because they want to be here, like you said, and so we do have to manage that growth as well. We can't turn people away at the border, and we're not going to do that. Like, we love that mix of perspectives and experience and intelligence and ideas, and so that helps us be more creative as an economy. The tourism side of it has definitely taken a hit, and it's going to take us some time. We're hearing things everywhere from 3 months to 6 months to 2 years. Like, we just don't know how bad it's going to get. With us going to yellow, that'll help, but we also then have to balance the health aspect of it and really continue to test and pay attention to what's going on the health side, so we can balance that out. So we're following the state's guidance, and Dr. Blodgett with our Southwest Public Health Department, he's very much about not being super restrictive, but being really smart. And that's pretty much the mentality. Everybody has a different opinion about how we approach this and what we should be doing and everything, but overall everyone does agree that we do need to be smart about it. And we just, luckily our state kind of led out and put together this great plan. We're hoping to get more details like for restaurants and stuff over the weekend of what that actually means for them going yellow, so that they can better understand, what they need to be doing to be successful. And so, yeah, we're definitely, it seems like we keep saying, oh, in another month, we'll have a little bit better of an idea. And we do, but then there's still, all these other questions.
Yeah. And it's just so little at a time. And I have to say, thank you so much for your time. It's 9:20 and I try to keep these because I don't want them to go long and
Perfect.
one thing. I'd love to have you on maybe in a couple of weeks again as well. If you have time, I know your time's valuable. I do want to say one thing. Mayor Pike, and I feel like St. George, the city councils, and even the cities in general in the greater St. George have been doing a great job. I feel really proud to be a part of our community, and the leaders in our community have been doing a great job communicating to everybody and listening to the needs of the community. So I want to say thank you for doing that, and thanks for coming on today.
Thank you very much.
If you want to stick around and listen in, great. If not, I know you're busy, you got a bunch of things to do. Hopefully we'll see you again.
I'll stick around as long as I can. This is great.
Thank you so much.
Thank you. Have a good one.
Yeah, Wes, hey man, thanks for coming on. Wes Davis with NAI Commercial. He's agreed to chat a little bit about commercial. Are you there, man? Do you have can I see your smiling face? You got such a great picture there, man. But
there you go. You'll have to do for today. Sorry.
That's all right. Nobody else is on camera. I'm the only one. I'm literally the only one on camera. So.
Oh man, but you're looking sharp, so that wow. Counts as something.
Oh, look at
look, McCray, everyone's busted in now. Yeah, and you got Morgan smiling at you, even waving.
Yeah, Justin Morgan's getting to give me the smile. Nice. Yeah, Wes, if you could, man, that'd be awesome. Hey, thanks, Brett, for being on.
Yeah, no problem. To talk to a couple of points that Shirlayne brought up, I was reading just yesterday and kind of going over some statistics nationally on areas of tourism. One of the stats that came up is for 3 weeks, maybe even 4 weeks now in a row, that occupancy at hotels has been up. And I think over the last week, they said a week-over-week increase was 31%. So it's some good news. I guess if you were down from 90 down to 10%, I mean, a 31% jump isn't enormous, but it's something, and it's a move in the positive direction. So hopefully we'll continue to see people venturing out, especially when you can go for so cheap. I had a client last week go to California, and I think his hotel at a Marriott was $30 and his car rental was $13 a day. So wow. Hard to beat in Southern California.
Yeah, well, and part of it, I had Chris Benson. He had another appointment that he had to get on that he couldn't get on again this week. He's with Safari Hospitality, and hopefully I can get him on to talk about a little bit about what Shirlayne was talking about with just tourism and what they're looking at kind of a macro level with how tourism is going to be affected, not infected. That's a weird word to use instead.
I think you might be able to.
Say that again.
I think you might be able to. Yeah, Brett Burgess might be able to enlighten us a little bit on the impact to some of the tourism and occupancy for hotels here in our local economy, and even in the Mountain West States region. I know they've got some holdings that are outside of the St. George market.
Yeah. Well, I want to really dive into commercial real quick. The hospitality side and that I want to really try to lean into the housing market and just housing in general, and that's going to include commercial, right? Is those businesses and attracting businesses so that people come in and buy houses is really important. So tell me a little bit of what NAI is talking about and any data that you have to share with us, man.
Yeah, so this morning I had our office manager kind of pull the stats for the last 12 months, and we were looking both at listing volume and closing volume. And this is primarily non-MLS data that we were able to pull. And so we looked at the data from last year in May to this year in May. And if we look at the numbers, our closing volume is down probably around 50% from where it was a year ago. But you look at listing volume, and it is probably only down about 25%. In fact, if you look at February, March, and even the beginning of April, we were tracking pretty dang close to where we were last year. And so for commercial, most of the transactions, close buy-sell transactions are 3 to 6 months transactions. In there, those also included leasing activity, and leases are usually, a week, 2 weeks, 3 weeks that those transactions take place. So it's still been very active, lots of calls. I think agents are even getting a little more active. We have had even several properties that have come, if they're properly priced, office building, multifamily, retail centers that are getting multiple offers to purchase. And then leasing activity, there is some new product that's coming to market, but the old stuff is being absorbed and there's not a lot of new stuff coming on market. So that's a positive step for absorption. We're not seeing a lot of vacancy based on what's happened over the last 8 to 9 weeks. I haven't really seen any major local businesses yet that have shut down or gone out of business. This morning, or yesterday, if you were driving around on Boulevard and River Road, you'll see the signs came up for Zupas that they're starting to hire. You've got plans down on South River Road for Dutch Brother Coffee, or Dutch Brothers. They have more than just coffees. The one out on Santa Clara Drive on Sunset's getting ready to open as well. I think that'll happen any day. So there are several businesses that are opening. There's some other ones that have leasing activity going on, and these are both retail and non-retail sector. We continue to see some strength in the industrial market, and I think office and retail over the next couple of months, we'll just have to keep a close eye and see if consumer and employee trends vary at all, if people are still working remotely, if they like to come in and see a smiling face and interact with other people, if businesses think that their employees are more productive working from home. But I think all of those things bode well for our market, given that a lot of people moving here are looking to work remotely. They can move from California to St. George and still continue with the same job because they don't have to go into an office, and where you can hop on a trail 5 to 10 minutes from your house or go to the lake or in some of the other natural beauties that we have that are 20 minutes, 30 minutes from home. The word's out, and I think a lot of people, that'll be a drive to continue to have them come here. So if there is a larger impact on a global and national scale, I think it might bode well for our economy here.
I did the mute thing again. Awesome. Thanks, man. I appreciate that. Just because I have Taylor shown on, and Taylor, I'm not sure how familiar you are with the commercial loans, but if somebody else, Corey, if you might be able to touch on commercial loans, do you feel like any of those, I know the Fed's doing everything they can to keep interest rates and mortgages, interest rates from going up because we want to keep demand rolling, right? Because I think demand is what's driving the economy forward. As long as we can keep money in people's hands so they can go out and spend it, we should be okay to go forward. What's the commercial loan world like? And then if you want to touch on the residential as well.
I probably shouldn't comment on
I can touch on the commercial.
Okay, Wes.
I can touch on the commercial right now. We've got a couple of clients that are working with both SBA and non-SBA loans. And the process, while it has been a little bit slower, they're still very proactive, very aggressive. The rates are really good. We've had a couple of clients shop an office building of all things here recently. And we had 2 or 3 of our local banks that got very competitive, in fact, offering rates at low 4s or sub 4 levels, which have been somewhat unheard of for a long time in our commercial lending area here. So I haven't heard any bank say no, that they're not lending money, whether it's a local bank here or any of the national lenders for pension, annuity, life, company type money. So commercial loans are still happening. I know there's some concerns with some large national portfolios as it relates to defaults, but I think a lot of those lenders are not in our market. So
yeah,
there's still good loan activity.
Yeah, this is the best part for us in looking for positivity, is that we've had such a healthy growth over the last 10 years, and that lending rules have been pretty consistent. We've gotten more strict over the last 5 just to keep things from spinning out of control. I think that healthy growth and the healthy mortgage rates have been really good. So I think that's great news that the commercial side hasn't gone one way or the other too, because I hear everything about the residential side, but I haven't really heard much about the commercial. So thanks for touching on that. Taylor, do you want to just jump in and kind of talk a little bit? I think a lot of us stay up to date a little bit more with housing mortgages, but do you want to give us a quick update? I think you're still muted.
There we go. Yeah, some really positive news in the market. I think we're on our 4th consecutive week of increased mortgage applications per week. So this last week we were up 11%. And this week so far, we're up another 6%. So,
and is that week over week?
That's week over week.
Okay, great.
So if you look at the data of the 10-year Treasury, you'll see that the last 28 days have been very consistent. So basically, since the stimulus package, as the government started pushing money into the mortgage-backed security market, the rates have stabilized a lot. We saw things spin out of control. Just a general idea, right now, conventional rates with a 1% origination fee are all the way down to almost 2.7. So I was locking people yesterday at 2.875.
Wow.
And the VA rate's even less. Yesterday I locked a VA loan on a 30-day lock at 2.75. So you're seeing some really aggressive pricing on 30-year bond or 30-year mortgage, and that's just due to the bond market.
Yeah, the Fed's been buying up those bonds like crazy, and I think that's really driven that. And I think if we're talking about and Brett, I saw you take a picture of that. I'll make sure I get some of this stuff out to everybody. Thinking about that, and thank you for touching on that, because I've had a lot of requests from agents saying, hey, what conversations should we be having with our clients? And I think this is a pivotal conversation with our client, right? Is that if you're trying to overextend and buy a home that you really can't afford, based on your job, if you're in tourism or if you're in hospitality, maybe you shouldn't be stretching too far. But if we look at the long-term health of somebody buying a home right now, it's almost a no-brainer in any way, shape, or form. If you're looking for a primary residence in a healthy price point of what you really can afford, we need to jump on the opportunity, with just a couple of questions in mind, saying like, well, how strong do you feel about your job? And if you were to lose your job for a short amount of time, how quickly could you go find another one? What are your skill sets, right? Like, I really think that if that's what we're seeing right now in interest rates, that's almost all you need to know, right? If you want to buy a house, there's not a better time to do it.
Yeah, no, that's a great point. There's one interesting thing that came up, and I know most of you that are on the call are real estate agents. I've had a lot of calls in the last week, actually. I had 3 last week, where agents called me. I don't do most of their mortgage loans. I may be like a second option for some of these realtors. And they called me and said, hey, my client was told by my lender that they can't qualify anymore because they've just lost their job or they've just been furloughed. That does create a tricky situation. So for all of you that are agents, when people lose jobs or have a reduction in hours, that it truly does create a big problem on the loan side. When we start to see variable income, variable hours, that is an issue. So if you have clients like that and your lender's telling you, hey, we've got an issue, they're probably right. I know that it's, everybody's like, oh, I'm going to find somebody that can do it, but that is a valid issue and it does cause problems. So if you've got something like that, trust your lender. They're probably pretty accurate in those issues that are coming up. So just kind of a side note.
Taylor's like, I'm sorry, but I've said this to like 15 different agents in the last week. I really like to get the word out that that's really a reality.
I just think it saves a lot of time for everybody, and it's an issue that we're all running into. We all have, most of what I do is new construction, and it's even a bigger problem there because we pre-approved somebody, 4 to 6 months ago. 2 months later, they lose a job, and now their house is getting close to being finished, and it's like, oh, great, what do we do?
And they got non-refundable construction deposits.
It is what it is. We just got to do what we can.
Yeah. That's an important, I appreciate that update on what's going on there. For the sake of time, because I could ask a bunch of other questions, Brett, I kind of wanted to talk to you about builders and construction deposits. And I kind of have this idea of saying, hey, what can we do as a community? Like, I'm looking for action plans of some things that we can kind of mastermind together and say, hey, how can we get out in the front of what's going on, so that, let's say something does, if the economy does slip into a a more of a depression than what we really wanted to see, what are some action steps that we could take today, knowing that 6 to 12 months from now, we can kind of be ahead of the game? And I'm thinking of it in terms of construction, because home starts have always been a challenge over the last probably 8 years, since construction kind of just stopped, right? After the last housing market crash, housing starts just stopped. We stopped building homes. And then there was a big wave and we started creeping up. And Brett, maybe you could talk a little bit more about this, but 2014 is when we really started to ramp up a lot of the builds in St. George and the greater St. George area. Do we feel like there's a moment to where we should figure out new ways of stimulating and keeping construction going? Or do we, what could we look at? Has anybody thought about those things?
Can you hear me?
Yeah, I can hear you, man.
All right. Yeah. It's an interesting question. I just remember going through the last one, and I think it was interesting for me, and it just goes to the economy. It goes to what we have in the marketplace, and a lot of it, in my opinion, the residential was supply and demand. I was there, and our stuff started coming back in kind of 11 when we started just creeping back out, and then 14 it kind of really exploded. But I actually think, as far as a community, we all learned a lot from it, because a lot of us went through it. I mean, almost every one of us that had been here through it, learned a lot. And I think we put those practices into place. I think that a lot of us, supply and demand was a huge one. I mean, we went into that last one with a lot of supply in the market. I think everybody did. And it was a challenge, because not only did we have lot supply and there were home supplies, coming out of our ears, but then we also started competing with all the homes coming back on the market, through the financial crisis.
Yeah.
So we just had a glut of stuff to buy. I think that just as an industry, a local industry, as far as housing goes, I think we're positioned well. I don't think anybody I talk to has a lot of inventory like we did last time, and we're already filling it. Like, I had a builder who buys a significant amount of lots from us. When this started, probably at least 6 weeks ago, he cut his takedowns with us in half. He's like, I'm taking down this many lots and I'm doing this. And, we adjusted, and luckily we didn't have a lot of stuff out ahead of us. And we kind of felt that through a lot of builders. That's kind of why I was really zooming in on your numbers, because we feel exactly what your numbers are showing. You can see that the closings and the pendings, the pendings went down, and then the closings were going down after that. But we're also seeing your new pendings going up. And I'm assuming that the closings will go up right after that. Because that builder just this week on Tuesday came back and said, hey, we took this dip, which you can see represented by your numbers, but our closings, you can already see 128 right there, are coming back. And he felt it, and all of a sudden those takedowns he put on hold, he just put back on the list. So
yeah, I think that's brilliant, because that's the lesson that we learned, right? We learned the lesson of like, well, let's not get supply overwhelmed, right? And if anybody watched the energy market, because it was actually Robert Spendlove touched on the energy market a little bit. And if you look at the energy market, we said stop producing oil, because if our supply outpaces demand, then the values are really going to crash. And you saw it crash because they didn't do it early enough. Where you're telling me that the developers here say, hey, let's hold off on some takedowns and not let supply overwhelm us. Let's hold back so we can keep values from losing. And I use this actually in a lot of listing appointments. I use a similar graph as a supply, just a basic supply and demand, right? And anytime we're trying to communicate how the basics of the housing market works, and if you're trying to resell your home, supply and demand, this is economics 101, right? If you were to take freshman econ, this is what they talk about, right? As demand changes and supply changes, that's where prices change, right? And so they said, hey, let's cut the quantity down. So because as price comes down and quantity goes down, prices stay where they're going to stay, right? An adjustment on those are if both go down at the same rate, prices stay the same. But if supply outpaces demand, that's when prices are going to start to swing, and we're going to see this pendulum of the market. And it's interesting that the lenders are doing their job and saying, hey, let's keep up demand, and the builders are saying, hey, let's not overpay supply, and we're on the same page with Washington County. Housing starts and construction permits kind of drive our health of our housing because we have so many people moving in, right? So I think that's an interesting conversation, and I'll because I really do want to touch on conversations with our clients, and because I have a lot of realtors that tune into this and have questions about this. Brett, thanks for those insights, man. I really appreciate you chiming in. We did a mastermind. Gary Keller speaks with the top 1,000 agents on a regular basis. He actually meets with the top 500 agents regularly, and we took a bunch of notes on some of these conversations that we have, thinking about it, our businesses as you know, CEOs of small businesses all across the country. And one of those things is understanding the market as a market of the moment. So it says adapt your lead generation to your conversations in the market of the moment. So what that means to me in the conversations I've been having with my top agents and top agents that are having conversations across the country are, we don't want to forecast out concerns, or even not just concerns, but the possibility of positivity, right? We want to find where we're at right now, and that's where we want to land. So if we can look at the market of right now, we have low interest rates, we have some job insecurity with some of our buyers, and then we have a lot of sellers that potentially are second homeowners. Luckily, over the last 10 years, primary residences have gone up in Washington County, where 10 years ago, second homes were a big bulk of our market. And we've had so many that are primary residents now, and retirees, right? So if we have primary residents and retirees, people working here, living here, contributing to the local economy, we're going to be able to be self-sufficient, right? So if I'm talking to a seller here and they're in California, potentially I tell that seller, you might need to think about consolidating your funds. If you're potentially going to lose your house in California based on your economy there, that might be a reason why you sell. But buyers here wanting to buy here, I think it's a great market because it's the market of the moment, right? Our market right now couldn't really be better if you're looking for your particular criteria. If you want a primary residence, you're living here, you're working here, there's not a better time to build a new home or buy a resale. Does anybody want to touch on that market of the moment and conversations they're having with their clients?
Hey, Robert, this is Sean.
Hey, Sean. Thanks for jumping on, man.
Yeah, thanks for having me. So a conversation, at least we're having with potential buyers so I'm in the mortgage industry, residential mortgages.
Sean's with First Colony Mortgage.
Yeah, First Colony. We have a lot of buyers that are concerned on what housing's going to look like in the future. Should I wait? Will prices dip? Will there be another housing crash? And we're trying to share at least what we know, in the now. But the big thing in their favor right now is how low interest rates are. So how affordable financing is. And for them, long term, 1%, say, savings in interest rate over a 30-year term means a lot more to them financially than if there was a market swing.
What would you say that 1% is worth? Just on an average.
Yeah, so it's going to vary, but kind of the numbers, if you were to just do a rough comparison, is about a 15 to 20% market swing. I mean, that's going to be under 400,000 for sure. Once you get into those higher prices, it could be bigger. And I think that market's a little more volatile, but it would need to be a big swing for them to get in at a higher rate for their monthly payment. Yeah.
And that's what most buyers are looking at, is that monthly payment, right?
Correct.
And so if I'm a realtor and I'm having that conversation with my clients, weighing out what's important to them, right? Is the sticker price, or is it the fact that they're getting one of the lowest interest rates that we've ever had in the history of the economy and a lower monthly payment? Or are you saying, well, I'm worried about that extra $10,000 that they're asking for that house compared to where I think it might be in 12 months, but I have no idea, right? So going back to that market in the moment, is saying, when you buy this house at this interest rate, if you were to look back 10 years from now and say, hey, was that a good idea? I don't think you can go wrong, right? And so what I think is going to happen, and this is what I would coach my seller client. I think we're going to borrow, and I would normally draw, but I'm not a very good drawer. I think we're going to borrow some buyers from the future, and we're definitely going to borrow some sellers from the future, right? Because if I own a second home or an investment property, and I'm just at all concerned, I have these emotional concerns about what might happen, or I don't feel educated enough to gamble on whether or not I'm taking advantage of the top market. We're at the top of a 10-year run. Historically, values got to adjust somewhere, and that's part of our economy. That's part of a capitalist economy, right? We go through these ups and downs. Investors are gonna be like, I might as well just sell now. If I wait 5 years, I'm not gonna kick myself for selling now. So we're gonna borrow some sellers that would have potentially sold a couple of years from now, or maybe even 12 months from now. And the buyers are gonna see these interest rates and say, I was thinking about buying 12 months from now, but now I definitely think I should buy right now because of how low this interest rate is, right? And so we're banking on that. I think that's what the economy and the stimulus is doing, is to say, hey, if you're thinking housing, just only if we were to just lump in just housing and not anything else, and say, is it a good time? Let's borrow some future sales for right now, knowing that we're kind of in an uncertain time. I think that's what's happening. So to ease a seller's concern is like, hey, is demand out there? Well, we just went over those numbers, and demand is right. And if we go look year over year, and I'll share this last one, I use broker metrics to look at residential sales stats. Broker metrics. So if we look at under contracts from March to April, we're up 6% March to April, which is great. Knowing that really it was the second half of March that we took a beating, if we go back to those numbers before. But if you just go look at last year and say March, if I was to switch this March to April of last year, under contracts went up from March to April 14%, right? Our number sold went up, but our for sale went down 1.6%. So look at here, our for sale is only down 2%. So not really, it's a negligible, right? The number of listings is really negligibly down if we're looking 1 month over 1 month. Under contracts up over the 1 month period, up 6%, right? And solds are come down, but that's because that second half of March, closings took a little bit longer. I know when the May numbers roll, we'll see those sold numbers really bounce back because we put a bunch under contract. We're up 6% under contract. They didn't sell in April yet, but they probably are all closing in May. And I think, McCray, if you could corroborate that, is some, have you seen more closings happening in this early part of May than you really were feeling in April?
Hey, sorry, I was muted. Yes, the last 2 weeks we've seen both an increase in closings and in new order count too.
Yeah. So
based on purchases.
Yeah, I think we've kind of rubber banded back to where we were because we're borrowing from that future. So as long as we can keep up that momentum, we don't have a big unemployment issue here in town, which Wes made it sound like, not a lot of businesses have really been too monumentally impacted, and we have people that are still hiring. I think those are all positive things. So if I'm talking to a seller or a buyer, if we could look at our local economy in a box, right, and not look at anything else, because it's easy to look at the news and look at national, and Robert Spenlove talks a lot about the national stuff. Utah's in a really healthy place, and I think that should ease concerns of any of your clients, whether they're buying or they're selling. Now, investors, that is such a unique, there's so many factors that go into what an investor's goals are, right? And I think if I'm a real estate agent and I don't know what the real goal is of my client, I have my next door neighbor, they took a home equity line of credit out on their house a couple of months ago, and they're sitting there with 70 grand, and they want to go buy an investment property. And that's great. I'm always concerned as a realtor, if somebody's borrowing from their primary residence to buy an investment property and use that equity to try and make them money in an uncertain economy, potentially that's not the best idea. Now, if they get a really great interest rate and they feel like they could foot both of those bills, right? If they feel like they could carry both of those bills, that's up to them, right? They're going to have to take that risk. Would I advise that risk? Probably, I would probably hesitate to advise that. Has anybody else had any other conversations aside? Because I think those are the different categories, right? Buyers, sellers, and then investors. Buyers and sellers, I think it's a great time. Investors, it's a total what's important to you about investing. And I just want to wrap on this thought since it is
Robert,
go for it.
Hey, just as far as investors goes, we've seen continued traffic of both cash buyers and 1031 buyers. The biggest challenge we've had is being able to find them something that kind of fits their criteria. There's a couple of them that are, looking for a steal, looking for a killer deal. Hey, the market's down, people are desperate, which there have been a few sellers like that. But then the other part of that is there are guys that just want to get a good, solid return with a steady investment that they can hold and be low maintenance. And so good inventory, as far as it relates for me, has been a challenge to get to the investor pool that we have looking for stuff. But there are lots of investors from in our market and outside of our market that are still very active. Yeah,
it's interesting because trying to drive listings, right? If we were trying to drive supply, it's tough because there's no real reason to convince somebody to sell, right? It's not like aside from you're at that 10-year high of a market increase. If I'm a smart investor and I'm taking advantage of that, but my investment's still cash flowing and I'm not concerned about rental values going down, we're not seeing a big impact. There's not really a fire for sellers. So I can see why sellers are saying, I'm just going to hold out. Well, I don't need to sell yet, right? The value of my property isn't going to swing overnight. And I reiterate this to my office all the time. Real estate doesn't just change prices overnight. It takes 12 to 18 months in general to swing these prices. And I think a lot of sellers are going to be smart and watch these things and not, rush this supply to the market, which is why it's good to hear from Brett that building is still, takedowns are coming down, because that's where we're driving supply, is that new build. And creating that supply is really the best way for us to drive those listings. And so if I'm a realtor, if I'm commercial or residential, and I'm talking to investors out of state saying, hey, this is a great place to still build, right? Let's create some inventory rather than try to buy up existing inventory. I think we have a good market for that. Does anybody agree or disagree?
So I was on a call yesterday with a group of investors, and they were all talking about what they're seeing in the market. They're all local. And every single one of them said basically they're in a wait and see pattern. They didn't say, they said the inventory right now isn't right, and they're seeing the writing on the wall that foreclosures are forthcoming. Like you said, it takes quite a while for that market to correct itself, and so they see the foreclosures, 9-12 months from now. They see the opportunities there, and they're basically just waiting for those to hit, is what every single one of them on the call said.
Yeah, and that's an interesting piece, because that might be really true of certain states. And then that goes back into, well, how healthy do we feel like our economy is? We got back into the yellow. We had businesses rolling quickly. Is our local population still making money to where, are we going to have a lot of foreclosures here in St. George? Because it's gonna be like kind of like in my opinion, and I could be wrong, but it could be like a tornado where it devastates some places and doesn't devastate others, right? Nevada might be really devastated because of their overall economic mix is so heavy in entertainment and tourism and these things that require thousands of people to get together, right? That's their economy. Luckily for us, we don't have that. Our economy is based a lot on technology, where we can remotely work, and we have these businesses that support us outside of that. So I'm really hoping that doesn't happen here in St. George. And so the holding pattern, though, that supply just might stay down for the next 12 months, but we can only watch, right? Okay, anything else? Anybody else want to touch on anything?
I'd just like to say, on a bright note, reviewing many contracts in the last 30 days, that we're seeing listings sit on the market 2 to 3 days, and then they get multiple offers. And that, to me, is an indication of a lot of people getting out of California and other places and getting up here as fast as they can. So whatever that means in the future, I don't know. But right now we're taking it, and inventory is kind of low in certain price ranges of houses. There just isn't a lot to pick from.
Yeah.
Especially in the new industry. So
yeah,
anyway,
the demand is definitely there for our area still, for sure. And I just moved recently into Red Mountain Vistas. Cade Entz has a subdivision with the Fries that he's building out, and I met a bunch of the renters that are in there because I moved in as a primary, but a lot of those units are being used as rentals, and almost all of them are from California. I mean, I've talked to probably 5 or 6 of them already, and I think 4 for sure were all from California and just recently moved here from California. So it's interesting to see, you know, if that's our first wave and they go into the rental market, and then once they're settled here in St. George, then they become buyers. It'll be interesting to watch if California can't correct itself as quickly as we have. We might just be the obvious opportunity to go to, which will help us, and then we take advantage of that. And that's kind of what I was leading into with Shirlayne is do we take this opportunity and take advantage of this? If I'm a real estate agent, I'm going to market to real estate agents out of state. I 100% am going to go to Nevada agents and California agents and say, if you know somebody that's thinking about moving out of state and they need a place to go, St. George is a great place, and to connect me with them. I think that's a great opportunity for leads and to help drive people here.
you know, one more thing, speaking about rentals, I was speaking with Candace yesterday. Candace Cather has STG Rentals in our office. She manages over 210 properties. She told me she only had one renter that couldn't make their payment.
Yeah.
And that's a pretty good strength in the rental industry. And she says, I'm renting them. Everything I'm getting, I'm renting. So
yeah, a lot of factors to go into that, but it's good to hear those things. Anybody else want to contribute? Becky, good to have you on. Good to see you, Laren. I have a couple of phone numbers here. I don't know who it is. Kate, George Prado, thanks for coming on. If you guys have anything to say, let me know. I'm going to hang out here just for a minute, but that's all I got for everything today, guys. Thanks for jumping on. I'll share this with you, and I'll also share that report. You are the champion. Becky, do you want to say something?
No, I was just going to thank you. That's good information. I appreciate it.
Yeah, absolutely. Good to have you on. Okay, guys, I'm jumping off. Brett, have a good day. Wes, thanks again. We'll see you guys.